when we see number 227, it's feel proud to us that we have shared so many topics, so many knowledge, information to the industry and the profession. Today's webinar is very important and topical. This is on RPT industry standards, practical perspective with Q&A. Friend, as you are aware, to promote good corporate governance and enhance disclosure requirement in related party transaction, SEBI White Circular dated 26 June 2025 issued industry standard on minimum information to be provided to the audit committee and shareholders for approval of RPT, which will be effective from 1st September 2025. Friend, the regulation 23.234 and SEBI LODR regulation 2015 mandate RPT be approved by audit committee and if material by the shareholders. And the section 3B of SEBI Master Circular dated November 11, 2024 specifies the information that must be placed before audit committee and shareholder for their consideration of RPT. Now, in the circular of 11 November, SEBI mentioned that these are the information you have to give. But that is the running matter. And then SEBI suggested that there should be format so people should not misunderstand what is the intention of the law they should fill. So that's why they came out this suggestion and they gave this work to the industry standard forum to make out the format. So to facilitate a uniform approach and assist listed entities and comply with these requirements, the ISF Industry Standard Forum has formulated RPT industry standard in the consultation with SEBI. And in the industry standard forum, the people were nominated by FICCI, CII, ASSOCHAM, and various other professional proxy advisor, prominent chartered accountant, and various other people were there. These listed entities shall adhere to RPT industry standard to ensure compliance with section 3B of the Master Circular, read in conjunction with Regulation 23.234 of the LODR regulation. Friends, today we want to discuss the all key issues and concerns before RPT industry standard, key objective and purpose of the RPT industry standard, applicability of RPT industry standard, guidelines for placing information to the audit committee, minimum information to be provided to the audit committee for approval, including ratification of RPT, and minimum information to be provided to the shareholders for approval of material RPT. Now, friends, you must understand this is minimum information provided to the audit committee and shareholders to take a decision on RPT approval. So this is a disclosure requirement, and disclosure requirement has come out in a uniform basis. So all company should follow the same. Friends, today is very, very interesting day for all of us. And I want to heartily welcome all the learned panelists of this program because these are all people have come to our webinar. So we are not giving detailed introduction. Everybody knows these people. So we have first, I welcome Mr. Amarjit Chopra, a senior partner, GSA and Associate LLP and past president of ICAI, Institute Chartered Accountant, very learned person and worked very hard in AS accounting standard and various laurels in his name. I welcome Chopra sir. Then we have Mr. GP Madan, founder of Madan Law Office and M&A Task Force, co-chair of ASSOCHAM, and he is one of the brilliant expert in the insolvency law. I welcome Madan sir. Then we have Dr. K.S. Ravichandran, Managing Partner KSR and Company Secretary LLP. He is ruling South India and North India also by his knowledge, and KSR is really working very hard and spreading, doing multiple type of things. I welcome KSR for this program. Then I welcome Narayan Shankar, former Executive Vice President and Company Secretary Mahindra & Mahindra Limited. Narayan Shankar, he has recently retired from Mahindra, and he is one of the finest professionals in India on various work related to listed company. Then we have our star batsman, the Savitri Parekh, She is company secretary and compliance officer, Reliance Industry, and she is the one of the brilliant mind in India on corporate law, company law, and the beauty of Savitri is her understanding on the subject, depth, section, para, sub-para, proviso, that is remarkable and marvelous. I welcome Savitri, and today we'll see the same betting from your side on this subject. Then we have first time we have invited Mr. Subramaniam Narayanan. He is company secretary and compliance officer of Larsen and Toubro Limited. And Mr. Subramaniam, welcome for the program. It's your maiden program in the out of our 227, and you will enjoy. And we'll take your expert advice later on also. Then we have Ankit Singhi, Head Corporate Affair and Compliance Corporate Professional, and Mr. Shivam Singhal, Principal Associate Research and Publication Corporate Professional. So I welcome all the dignitaries, panelists for this program, and interestingly, except Ankit, all are member of this standard forum, and they have drafted this particular standard. Last 6 months, they all are working day and night, and then they have come to this conclusion on this part. Friends, this topic is very, very interesting and very topical and very complicated also. And it has, so the purpose of this program is that we will glance through the entire thing today in short, and then we will have a question answer. In question answer, we received 50 questions already with us, but you can write your question. And if it is a unique question other than the 50 question which we have, then I will take up this. So one by one, chapter wise, we will discuss. And the purpose of this issue is that we have come out with a standard. And in the standard, the law cannot be made 100% perfect, 100% it can take care of every aspect. So the law is somewhere, it can be open-ended, it can be multiple interpretation, people can take multiple interpretation, understandly differently. So the SEBI has given this mandate to ISF that after these programs which FICCI has done, then other institution is doing, and then today we are doing, all these questions where people are having a confusion, we want to come out a FAQ. So all the issue, all the intention, all the points should be very, very clear, and everybody should understand. Today's program structure is this, that first we will tell you about the key changes, then applicability on this, and then the other part, the expression, and then we will have a question answer session. In the meantime, readiness for the compliance officer, Narayan Shankar will for 10 minutes, he will tell for all the people how they should follow this. And then we will have a detailed question answer session on each topic. We will write the section and then the questions which we have, and the people can, whatever they are writing to us, we will do. So before starting this, I just want to announce that Shivam will do because we have come out with LODR book. It is it's a revised book, and this revised book is adding the industry standard RPT also. So this is updated on till today. This is the latest book which we have updated in LODR, and I will request Shivam, because he has written, he has worked, all we have given a contribution, but his contribution is the most important. So I will give this honor to the Shivam itself, who is the writer, who is the coordinator, and who is done. So open this book, okay, and tell us about this book in brief. So this is new book, and all our participants, all our panelists will get this book as a token of love and affection after the program. Mr. Madan has already received yesterday this book, so I will send all the person. So Shivam, just quickly, just tell you about this. What is unique about this book?
Yes, sir. Sir, this book is divided into 5 divisions. basically. Division 1 is relating to LODR Regulation 2015, and Division 2 having all the circulars and master circulars issued by SEBI. Division 3 is having the industry standards issued by ISF. Division 4 is having all informal guidance issued under LODR till date from 2015. And Division 5, there is a ready reference on corporate governance, disclosures, and compliance checklist. All the things which needs to be ready as a referencer are here in Division 5. So this is the basically a key feature, and it is up to date up to 1st July 2025, and covers industry standard issued by ISF on RPT industry standard on 26th June. So I am giving a brief about the mapping of the regulations. I am placing here regulation number 23. So when any regulation starts, there is a brief about the regulation. What is the enforcement state? What are the subsequent amendments? Other regulation, LODR regulation referred in regulation number 23, referred provision of other law, and referred relevant SEBI circular under regulation 23. So each of the regulation having this kind of synopsis. After synopsis, there is a regulation, the text of the regulation up to date with footnote of the amendments. And after the end of the regulation text, there is all the reference material like circulars issued by SEBI, industry standards issued by ISF, FAQs and circular issued by SEBI and stock exchange exchanges, and referred provision of other law and informal guidance under that respective regulation. All the things are at one place under each regulation. So there is the other some key features also have the, as I am saying that this book is divided into 5 divisions. Reader may go directly into the uh, forage. There is a rainfall on the forage of the book. So if anyone want to go to the circular, so he may directly go through the forage, not need to go through this index of the book. Apart from that, at the starting of the book, we have noted down this applicability of SEBI LODR regulation. Each of the regulation o- applies on which type of listed entities like listed specified securities, listed NCS, listed as specified securities plus listed NCS and high value data listed entity. So this type of table is having in this book at the starting point. So these all are the key features of this book. Thank you.
Okay, Shivam, thank you very much, and thanks for your. Now, just to open this presentation, key changes in RPT industry standard, objective of this standard. That I am just telling you that why the first we came on earlier, then there was a industry suggested that this particular thing, and then other independent directors and various.
Shivam, next slide. Then formats. This is you've already run through. Now basic details. These are the basic details of all related parties which are beyond 1 crore individually or in together. Let's next. This is important. There your relationship between the related party and the listed entity or the subsidiary needs to be identified. In case the transaction is between subsidiary and related party, then the nature of transaction between the subsidiary and related party. In case it is between listed entity and related party, then between listed entity and related party. Shareholding of the listed entity or the subsidiary, direct or indirect in the related party. In case its related party is a partnership firm or proprietorship firm or organization without share capital, the capital contribution that has been made, and shareholding of the related party, whether direct or indirect, in the listed entity or the subsidiary. It is important the manner of identification of indirect shareholding has been determined in the standards, which means any shareholding held through any person over which the listed entity, subsidiary, or related party has control. So person has to be defined in terms of the definition under the General Clauses Act. It includes any corporation, partnership, any kind of person, not only any individual natural person, it can also include legal personalities. Then if there is an individual who is holding shares, then any shareholding held by relatives will be considered relatives for the purpose of this standard. LODR refers to Companies Act. So as defined by Companies Act, the relatives will be, so if there is a transaction with a director, if director is holding through his son in any in the listed entity, then that statement also needs to be, details also needs to be outlined. Next. Then this is a specific details with respect to the transactions. So all transactions entered between the related party and the subsidiary or listed entity during the last financial year. So total amount of all transactions needs to be entered, not necessary for which the approval has been taken. Total transaction detail amount of all transactions with the related party during the current financial year up to the quarter immediately preceding the quarter. So in case we are doing a transaction in second quarter, the details of first quarter needs to be provided if there is any. In case the related party has defaulted in any obligation under any transaction entered into with the listed entity or the subsidiary, then the details of the same needs to be provided. In case the transaction is with listed entity or subsidiary, as the case may be. Then this is now talking about the proposed transaction itself. So amount of the proposed transaction, whether this transaction along with other transactions which are entered with the related party would result into a material related party, then also needs to be disclosed. Value of transaction as a percentage of consolidated turnover in the immediately preceding year. In case it's a subsidiary, then the standalone turnover of the subsidiary. Value of the proposed transaction as a percentage of the related party's annual consolidated turnover of the preceding year. So if any, if the details are also provided with respect to the company's consolidated turnover, standalone turnover of the subsidiary, or the consolidated turnover of the consolidated turnover of the related party. If the consolidated turnover is not available, then standalone for the immediately preceding financial year. Financial performance of the immediately preceding financial year of the related party. There is a item list outlined. Then details of the transaction, type of transaction, tenure, if omnibus approval is sought, value of proposed transaction during the year, why the RPT is in the interest of the listed entity, details of the promoter, directors, KMP who have any interest in the transaction, whether direct or indirect, that has also been defined, and copy of the valuation report. If any other information which the management feels so, that can also be provided, or the audit committee feels that needs to be provided, they can also ask for. Now we are coming to specific transactions. This was the information in A, which was required in all the cases. B, this is only for sale, purchase, supply of goods or services. Bidding process, if any followed, details needs to be identified. Manner in which the price has been determined. So if the price is determined basis market price, some report that needs to be identified. In case there is a trade advance that is proposed up to 365 or days or such other period, if any proposed to be, then the amount of trade advance, tenure, that needs to be provided. For loan, intercorporate deposit, advances other than trade advances, I think. So if there is a trade advances that is in the if you have trade advance for goods or services, then it is not covered here. Only loan, any which is in the nature of any lending. So source of funds, in case any financial indebtedness had been incurred. So details of that the rate of interest at which the entity is borrowing money from its bankers, proposed rate of interest, maturity date, repayment schedule, if it's a secured asset lending, that secured nature of security, and the purpose which will be utilized by the ultimate beneficiary of such funds, which will be dealing with what we mean by ultimate beneficiary of such funds. Then in case of a specific material RPT, in case of loans and advances, then specific information that needs to be asked, credit related, credit rating, details of default, if any, done by the related party from listed entity, any person. If it is an NPA, it's a willful defaulter, it's in going insolvency and disqualified under section 29A. Any information on all these factors needs to be disclosed. B3, with respect to investment made by the listed entity, source of funds, financial indebt is the same. Purpose why the funds will be utilized by the investing company, material terms of the proposed transaction. Next. In case of material investment transaction, related party, credit rating, and any regulatory approval is required, you need to outline the details of the same. Surety, guarantee, indemnity, or comfort letter. It is important to note that comfort letter is also included as part of the transaction. So rationale for giving such, any binding obligation, key material covenants like any commission which will be received, in case the guarantees are invoked, what are the legal provisions, how company will recover, and the monetary exposure which the company is taken on account of the guarantee, surety, indemnity, or comfort letter. Next, in case of a material RPT, credit rating, details of solvency status and going concern of the related party during last 3 financial years. Again, financial exposure in terms of the obligation, details of defaults of the borrowing, and similar details like NPA, willful defaulter, insolvency. Borrowings, material covenant, interest rate, cost of borrowing, repayment schedule, secured, unsecured, purpose for which the funds will be utilized. So in the starting one, it was the company giving funds. This is when company is borrowing from a related party. In addition, if it's a material RPT, debt to equity ratio and debt service coverage ratio. Sale, disposal of lease as assets, unit, division, undertaking. Bidding process, determination of price, reason for the sale, financial track record of the subsidiary undertaking. So the track record of the subsidiary undertaking that is being sold during last 3 financial years, and the expected financial impact on the consolidated turnover and net profit as a result of the sale. In case of a material transaction, any earlier sale of disposal of the subsidiary of the same subsidiary or unit, if the transaction would result in any kind of issuance of any securities, if the transaction would result in segment reporting. For example, if I am dealing into particular 3 segments and I am giving one segment to any related party, then if there's segment, then I have to outline that I will not be functioning in this segment going forward. Any key tangible assets or customers if they are being transferred, and any major other non-financial reasons for going ahead with the proposed transaction. Royalty, I think this was having significant disclosures last time. So purpose for which the royalty is proposed to be paid. In case the parent company is charging royalty at a uniform rate from all the companies in other jurisdiction, then the minimum and maximum rate needs to be disclosed. If yes, you can say yes. If no, minimum and maximum rate needs to be disclosed. And sunset clause. Material, if gross amount of royalty paid by the listed entity in each of the financial year, 3 financial years, royalty paid in last 3 financials as per percentage of net profit, peer comparison, changes of rate at which the royalty has been increased over the last 3 years, vis-a-vis the rate at which turnover and profits have increased. So you have to give a comparative figure apart from the peer comparison. So I believe this is all. In case, okay, the guidelines also outline how you will select the peer review. First, you should look into your sectoral index if you're part of a sectoral index. And if there are lesser than 3 industry peers, you still need to give the disclosure, but you can outline that there are only a limited number of companies which are available. If there are no industry peers, then you have to outline the statement. Then there are no industry peers available as part of the explanatory statement. So this is all about the standards. I believe I've tried to rush it as fast as possible. And I think the members will now take care of the questions.
Thank you very much, Ankit. You have given a glance through to everyone, and we will share this presentation to everyone so you can get a simplified thing. Now, friends, before starting the question answer session, 10 minutes, I am requesting Narayan Shankar for readiness for compliance officer, because so many complications, so many things, and you have experience of so many years. And now, so just suggest that how the compliance officer should keep ready these things. So,
am I audible, Pawan?
Yeah, audible. So now we have 10 minutes. Okay, then we'll start question.
10, 15, at least give me 15 minutes, please. Okay, thank you. So while Pawan, Shivam, Ankit have all already given a detailed download, I just wanted to touch upon certain things from the compliance angle. Of course, SEBI has been extremely receptive in all the changes headed by this ISF headed by Pawan. Sufficient time is given till 1st September. I think now compliance officer would need to gear up and use the intervening period from July now till 1st September and communicated details required for both internally and externally, make responsive templates, SOPs, checklist, and ask other departments to be in readiness. Okay. So first, in change in SOP, remove reference to Part A and Part B of Section 3B Master Circular. Okay. Then in terms of documentation, bifurcate into verticals. Information in terms of what is required in omnibus, non-omnibus, what is required for specific transaction and what are required for omnibus. Because omnibus will be at the beginning of the financial year and these details will have to be drafted in a different manner. Okay. Similarly, document as part of the SOP that significant transaction even at the level of subsidiary. What is the backup certificate of from KMP of subsidiary you are going to get to enable the CU, CFO certificate from the listed company's perspective, correct? Then we have mentioned bifurcate information and Shivam has also mentioned about in the explanatory statement, information as required under the Companies Act, etc. Now I'm going to touch upon key documentation, certification, affirmation, which is required from a compliance officer. Don't bother about the nomenclature because whether you call it document, certificate, affirmation, it's your lookout. But I'll just give you a few points from a compliance officer. Define clearly what comes within the ambit of redaction. That is, what can come within commercial secret, information that compromises your competitive position in the listed entity, correct? Because only if it comes into this bucket that audit committee can approve redaction. To have a management confirmation from the management to the audit committee clearly saying that what is redacted comes within the ambit of commercial secrets. These are information about competitive position and a further affirmation from management that the redacted disclosure still provide all necessary information to the audit committee and then to the shareholders. Define what comes within, Shivam has already touched upon, key intangible assets. Seek budgeting from finance for future revenue for the listed entity and subsidiary. Key customers, seek information about portion of revenue which will come to the listed entity and subsidiaries from these key customers, correct? Then we have to ensure, as you're aware, trade advance, comfort letter, and performance guarantee. Unique things, you have to define and document what will come within trade advance. You have also to, within trade advance, also a bucket of self-liquidating trade advance. Because if it is not refunded but gets adjusted against future invoices, it will come, correct? In trade advance, while it refers to what, when you're giving a credit for supply of goods, it is typically a contractual obligation and it is recorded as an asset until adjusted against invoices. So when you are preparing a checklist, and what comes within trade and what does not come, you'll have to document it. Document advances to the group companies for procurement of raw materials. Prepayments under contractual obligation for future delivery. Advances given for booking production capacity. Capital advances for supply of equipment or assets. Advances to related parties even when timing of supply is uncertain, correct? Most important documentation, when would a trade advance fall under loans or deposits? When it comes to comfort letter, you're aware it is a non-binding and it's on a best endeavor basis. So hence, when you're preparing a checklist and SOP for comfort letter, letters from the holding company, confirming support to subsidiaries credit obligation. Promoter affirmations to bank that financial support will be extended when needed. You have to ask the finance department, what are the assurance given that the parent will not withdraw support during the term of a term loan which has been given to your related party. You have to ask finance for letters issued for credit rating support or vendor negotiations. Ask legal team to see the language of the comfort letter that they do not create a legal liability and come within the bucket of the guarantee, correct? Similarly, for performance guarantee, ask legal that is the performance guarantee, give me all perform where it is a legally enforceable commitment, correct? Document whether performance guarantee is in the nature of a security, which will have a monetary impact. In fact, I've got few suggestions and for inclusion in the SOP of what will come within performance guarantee. Parent company guarantee for timely completion of a project by subsidiary. Bank guarantees backed by holding company for contracts undertaken by group entities. Guarantees for quality, deliverables, or milestones in customer contract. Bid and performance bond issued on behalf of related parties. Then the third point comes is take confirmation from promoters, directors, KMP, etc. regarding controlled entities, entities with their control, because it will come within the ambit of indirect interest as Shivam has already cleared, correct? So get these details, and these will have to also be disclosed, the interest of the promoter, etc. And indirect interest, as you're aware, can only happen through controlled entities and not through significant influence. So any person over which the company, subsidiary, related party has control, please document. Meaning of take control, you have to go as per SAST. Seek information of control through shareholding and control via agreements also. Don't cover passive and negative control. Control is only proactive and not reactive. It should be documented as a power by which you can command the company to do what it wants. Control, in really means creating or controlling a situation by taking the initiative. Don't cover protective rights, as it is a power by which entity can only prevent the company from doing what it wants to do by itself and not control. In that, entity is only taking a reactive, correct, initiative. Document clearly that control, what is coming is a positive power and not. This will really help you, because a positive right signifies the right to compel the company to act, but a negative right signifies the right to compel the target to desist from action, and hence negative rights, remove it from your checklist. In a board managed company, you have to ask, it is a board that is in control, correct? If the acquirer has the power to appoint majority, it is obvious it would be in control of the company, but that is not the only way it is control can be established, correct? If an acquirer or if a company or a promoter were to control the management of policy decisions, even that would be control. This could happen by virtue of shareholding, management rights, or many other. Okay, and here there is a very nice judgment of the Honorable Supreme Court that can help company secretaries interpret the meaning of control. In this judgment, they have used the metaphor of a car or a vehicle, and they said that to extend that metaphor, the question of control would be whether the investor controls the steering, accelerator, gears, and the brake. If the answer to these questions is affirmative, then only you will be in control of the company. But if you are only having control of the brake, it is negative control, it will not get covered. For determining interest also include shareholding held by relatives, because in case of individuals, the relatives will also have to be covered. Correct? In case of RPTs undertaken by listed entities, correct? The disclosure of shareholding of subsidiary would be required, although there is a requirement that only if the subsidiary is the party, but yet you will have to give details of the subsidiary, because even if you hold shares along with your subsidiary, that needs to be aggregated. And if it crosses 50%, as you're aware, that other actually becomes a controlled entity, correct? So keep information about expected related party transaction, as details need to be, and
Arjun, yeah.
seek from the accounting or SAP group-wide exposure in a related party and keep it ready, because for omnibus and all approval, this will be required. Then document what clearly and give an email to everybody what will constitute default. Seek details of default, if any, made by the RPT. Okay, financial default, any default on obligation with respect to a transaction undertaken with a listed entity. Ask anything had moved into an NPA category. Have they defaulted any principal or interest with a bank? Has any related party taken a haircut or any extension of period? Correct? Any invocation of guarantee. Okay. Peruse, I've asked the finance team to peruse the RBI and all relevant regulatory website to verify whether related party have been classified as willful defaulter. Here, in documentation, you can say that you can go through the website of Reserve Bank of India. You can go through master circulars on willful defaulters. There is a credit information company. These are regulated entities by RBI where banks report willful default. Of course, I am informed that this willful defaulter is published by banks and not RBI directly. So there are many agencies like, for example, TransUnion CIBIL, correct? Banks and lenders report willful defaults under borrower profiles. Company can check their rank and credit report via this. Then there is CRIF High Mark, Equifax India, Experience India, because of course, my friends in the banks mentioned that many of these platforms require a subscription or authorized access. Lenders, bank, NBFC, I'm told typically use this for due diligence. Then you can even go through public sector bank disclosure, because each bank is required to publish a list of willful defaulter on its own website. So ask finance to peruse RBI and other website to keep a details of willful defaulter, scan public announcement under section 15 made for the interim resolution professionals, scan IBBI database for admitted CIRP cases, seek information from finance for onward lending by an investee company. That means end use of the fund by the investee with regard to funds invested by the listed entity, correct? Then you will have to seek a repository of brand, trademarks, technology, and is there any sunset clause, amount and purpose. Most important is if there is some information which you have not received. For example, if financial details like turnover, PAT, and net worth of the related parties are not received in spite of best efforts, then you will have to give an affirmation from management that despite the best efforts, these information is not received, and the management can give whatever information available and confirm that the disclosures still provide all the necessary information required by the audit committee for an informed decision making. This is going to be subjective, because which of the information is not available, if it is going to be important for the audit committee, then it can't come within this, correct? Otherwise, you can still give the affirmation from management and the audit committee can still go ahead and proceed. And confirmation from finance or treasury about cost of funds for listed entities for comparing the same with rate at which lending is to be done. And ensure that while writing to finance team, there is a comparison asked about borrowing undertaken by listed entity, maturity profile, interest rates, and other terms which are comparable to the loans being extended. If it is not comparable, it doesn't make sense. How document how parent is not leveraging its supplier credit or superior credit profile to borrow funds, and if it is passing it on to a related party, then it will definitely come within the clutches. Towards this, seek details of parent utilizing its own credit worthiness to secure borrowing. And is there anything immediately being given to a related party? Expected range may be provided, maybe based on past transaction, current scenario, everything, correct? Exact terms of transaction may be put before for its noting at the time of review and of transaction undertaking. Now, most important, some do's and don'ts, some notes you have to take, specifically information which you'll have to give to the other department. Ask finance to benchmark transactions against similar market deals using appropriate arm's length pricing methodology. Seek details of key terms, correct? Detailed juristic justification and supporting documentation for obtaining board and audit committee approval. Document backups required for certification from CEO, CFOs, correct? Then some don'ts, don't make a note to finance specifically requirement that if listed entity uses this credit profile and if there is a loan given to the related party immediately thereafter, just give the details back to the compliance team. Guide finance not to compare unrelated borrowing. Don't provide guarantee, comfort, or credit support without assessment and disclosure. Don't structure transaction to avoid disclosure threshold. And last but not important, you will have to ask them not to bypass finance and secretarial team at the corporate office, and do not try to classify transaction under exempt category without clear mandate or rationale from the secretarial team, correct? So I thought these are some important matters which you could put as part of the documentation, okay? And of course, there are differences in approach in many things. For example, to what extent disclosure in C is required, correct? One view taken by the compliance officer is if all transactions, regardless of the nature, are have to be taken together for determining, and if it the value of transaction, if it crosses your 1,000 crore or 10% limit, then these disclosures would apply. The second view taken by compliance officer is, even if it crosses the 1,000 crore or the materiality limit, only if the specific type of related party transaction, that is loans, investment guarantees, if that crosses the materiality limit, only then the disclosure. In fact, since there are two views, can also try whether this could be covered in terms of a clarification to be given as part of the FAQs, correct? Similarly, unidentified omnibus approval has been raised even in our last meetings, correct? That is where it is given on a no name basis for an aggregate value of 1 crore, where the approval itself is taken for unforeseen transactions, or where the company may not even have basic details as required under 23(3)(c). The question of RPT standards doesn't arise, correct? Here
Okay.
also probably we could give some amount of sort of guidance which could come. So I thought I have broadly tried to cover what could be the probable documentation you will require. There are many more, but as time progresses, I think we will all have to beef up our SOPs and ensure that we are fully compliant.
Okay. Okay.
Thank you, Pawan. I thought I've been
Yeah.
a small time. I tried to cover the best what compliance officers can do.
Thank you very much. Thank you very much, Narayan, for giving the guidance to the people. Now, it's a time, friends, first of all, let me just tell you the purpose of this webinar and the purpose. So I'm seeing so many questions relating to specific RPT. So friends, we are not addressing the RPT questions. We are discussing today the standard, that whatever connected disclosure is required as per the standard, we will cover, because so many questions are there. And after receiving the questions and the answer which we are giving, on the basis, we will submit all the questions and bring out the FAQ, because interpretation difference should not be there. What is standard is saying and what is the intention of the standard, the language arbitrage should not be there. So that I will that will be our focus. So friends, what I'm doing, all the points which are there on the basis of standard, I'm putting on the system, and then we will ask questions from our panelists, and we will do this. So first I will start the industry standard, then applicability, and then various other part. So now first question is on industry standard. Does these standard replace all previous RPT disclosure format? So now we have a 5-6 panelists. So what I will do, I will ask any panelist these questions, and anybody want to add something additional, he can raise their hand, and then we will just allow him also or her also to add this. So Savitri, I will start with you, because ladies first. So does this standard replace all previous RPT disclosure format?
That's right. It replaces all the earlier formats. In particular, the Master Circular of November 11, 2024, which speaks of disclosures, gets clearly replaced by this disclosure format. Uh, this disclosure standard, which very clear, RPT disclosure standard, very clearly states this, that if you are in compliance with the ISN, then it is considered as complete compliance.
Okay. Okay. Any different view other than Savitri? If it is views same, then we can move on. Okay. Next, what is the scope of minimum information, and can entities provide more? Can entities provide more? Subramaniam,
Yeah,
if you want to give more information.
yeah, of course. I think it is always welcome to provide more information, as I think governance is to provide information to audit committee, which is adequate for the audit committee to exercise its judgment to approve the related party transaction. And the title itself says it's a minimum information. So always you can provide more information.
Madan sir, if I'm providing additional information and there is a problem in this, which is not required, and by mistake or something has happened, what is a call on this? What SEBI can do? What legally you can protect that company?
Providing, as Subramaniam has said very rightly, providing additional information is a part of governance only. Whenever we talk about governance, in governance, we everywhere the minimum norms of minimum standards of governance have been provided. Anything over and above is always welcome, and that is industry specific, that is company specific, that is board specific, that is individual specific. Whatever information required for to seek any clarification on a particular transaction, that additional information can be asked for, can be sought for, and has to be provided.
Okay, Amarji sir.
No, I'm absolutely in agreement with Madan said that you see, the word itself is the minimum information. And when you say it's minimum information, anything which is additional and which can satisfy the board or the audit committee members better or the shareholders better, I think that information needs to be provided for. And that will only indicate a better governance, basically, that the management is willing to give more and more of the information. Whereas what we see is that the management may not like to give more of the information. And if some managements are willing to provide more information, which can be the basis for better decision making, I think it should be welcome and it should be encouraged rather.
Okay. KSR, my one question, Tirgudin. Suppose I have to provide some information, but I'm giving additional information and that information is not correct. Will it be against me or not?
Absolutely correct. It should be relevant. It should be correct. You can't add some information, whether it is intentional to manipulate the decision-making process or otherwise. So any information which is additionally provided must be in support of, in aid of decision-making, and any incorrect information giving is not acceptable.
Okay, okay, done. So you can give additional information, but it should be correct. Okay. Now, next.
What is trying to say that additional information should not be to influence the decision.
That is another aspects. If information is wrong, that is secondary aspects. Influence, you can, that is not a stoppage because you can give additional information, but it should not be incorrect. Okay. Next is applicability of the standard. We have received maximum question on this applicability. Okay. So we have a more than 12 question on this because everybody is concerned about this. So whether the industry standard are applicable to RPT undertaken on or after 1st September or only the RPT of which approval is taken on or after 1st September. Friends, though it is very clearly mentioned, but even then I will request Ankit, can you just explain? Okay, Subramaniam.
Yeah, Pavanji, I think it's applicable for RPTs for which the approval is taken on or after 1st September 2025. That's what the circular tries to regulate. That's my this thing.
No, but suppose I have taken a my board meeting is there, but shareholder meeting is after 1st September.
Yeah, so I think it's been adequately articulated in the ISF standard where the audit committee or the board is approved, already approved, and if the shareholders' approval is not taken, in which case you don't have to get regulated by the disclosure standards. But as such, any RPT which is taken for approval initially, that would start to get applied from day one pursuant to the ISF standards.
Okay. Savitri, KSR and Marji sir, any other direction, any other point in this? Because in this earlier when the standard came, there was issue, but now it is clear. Savitri.
Yeah. So actually, I agree with the views expressed, and let me also mention that if it is taken on or after 1st of September, then you will need to you will have to follow the industry standard note. Plus, if there is a material modification to any of the RPTs where you've already taken approval, you will need to comply with it. Now, actually, if you refer to Companies Act, every modification needs to go to the audit committee, but under LODR, it only refers to material modifications. So one technical interpretation could be that only material modifications to existing RPTs will need to comply with it. But having said that, from a governance perspective, I would say any RPT approval which goes to audit committee after 1st September, please comply with the industry standards.
Okay.
I think this is the best way, because what Savitri has said, approval of audit committee on or after 1st of September. Because there may be a situation where audit committee is before, audit committee approval is before 1st September, or shareholder approval is after 1st September. So will it be applicable to that or not? That clarity also should be provided.
Yes, yes. Okay. Now, next question. If approval, Shivam, next. If approval has been granted by audit committee and or shareholder before 1st September for RPT to be entered into on or after 1st September, then should the listed entity seek these approval again with disclosure as per the industry standard? So Savitri has given half answer, but I will request Savitri just complete this also.
So if approval has been granted before, and yeah, this is what I said, sorry. If you're placing it before the audit committee after 1st of September, please comply with the industry standards. Did I miss something?
No.
No.
You're right.
I think this is the same question in a different format now.
That's
Yeah.
right.
Yeah.
Answer is just the same.
And next question. Does the
One
IS
second, actually, let me explain this. I was trying to tell, but it was in mute. See, the question is that whether the listed entity could preemptively obtain approval for an RPT prior to the 1st September itself, though the RPT will, let us say, start from 1st April 2026. It is possible for them to do this kind of things, but I would personally prefer that any long period after which this is going to start is not a good governance practice. If you are working on literal interpretation of the standard about the applicability, it is not advisable. Therefore, I give an example. 1st September I approve, but transaction will start from 1st April 2026. That is not the intention of this thing. Therefore, if it is going to be in reasonable proximity, yes, no need for any fresh approval to be obtained. This is what I want to clarify. Thank you.
So just to add,
Just to add,
Sorry.
just to
Yeah.
add what what Dr. Ravichandran also mentioned, not only is it not a good practice, the audit committee members would also raise an issue. They would certainly, want to exercise the discretion in a proper manner, where you're going to be doing the transaction much later. You're taking an enabling approval today. It's unless it's an agreement which you're executing today, which will come into effect later. In which case, entering into the agreement is a transaction, and you're giving effect to it. Let's say, for example, the delivery is going to happen only in April 2026, but you are entering into the contract today. That's a different issue. But otherwise, if the entire thing is going to happen only in April, just to get over this industry standard note, please don't take it before the audit committee. The audit committee members will also not approve if it is done in this manner.
Okay.
Yeah.
Subramanian.
Yeah, just to add to what Savitri and KSR said, I think this kind of leeway is available only for the transactions which pertains to financial year FY26, not after that, right? And even for that financial year FY26, any unreasonable period is not right in governance.
Okay.
That's what I wanted to add.
Chopla, sir.
No, I think my this question has already been answered by Savitri. To my mind, once the standard has been issued, after that, because the applicability date is, the effective date is 1st of September. But if the standard has been issued earlier, in between, if at all there are going to be any approvals, I think that should meet all the requirements of these industry standard. In that case, even if after 1st September, these have to be re-ratified, I have absolutely no objection. And I would say that it will be a better governance from that angle. It should not be that the standard has been issued, but there is a time till 1st of September. In between, we come up with something. just with the view to avoid some of the disclosure. I think that should not happen, and that should not happen, and that should not affect my decision making also. If that has anything has happened in between this particular period, I think in that case it should be placed before the audit committee again after 1st of September with all the disclosures which are required under ISF.
Sir, this issue discussed in length, sir. So the point came that anything, if the audit committee has approved before 1st September, you are right on the governance part, but the legally, the before 1st September audit committee approved, it is standard will not applicable. Even if
Vijay,
yeah.
Vijay, we should be very clear. We have to go to the intent of the standard. I think if we get into this legal tangle only and not with the intent, I think then we are messing up somewhere else. It should not happen that in the name of this legal part, we miss out the intent of the ISF. If the ISF requires some disclosures to be made for the purpose of the decision making, I think those then in that case, the decision making has to be based upon those disclosures. It should not be that 10 days before 1st of September, I take a particular decision and I say that it has already been done. So that should not happen. I think, to me, when we talk of the good governance would mean going by the intent of the law rather than by what is written in the law. I think that's very important.
So we can leave this on the part of the governance, the company's part.
Maybe.
Yeah, Jawab Madan.
Yeah, may I put it this way that on or if AC is on or after 1st September, it's mandatory. If AC is before 1st September, it is recommendatory. And in those cases, it is advisable that all independent directors on the AC, they insist the management or the company secretary to place this information before the AC.
Yes, Madan, this is a law cannot write.
No, I'm not saying law. I'm not. This is what I'm saying. Actually, this should happen. That's all. This is advisory.
Okay.
It's advisory not from SEBI, but it's advisory from we the professionals.
Okay. Now, next question. Does the ISF disclosure... No, Shivam, go back. Shivam, does the ISF disclosure standard apply in case where omnibus approval has been sought for unforeseen related party transaction? So, Subramaniam?
Yeah, Pavanji. So, in my view, see, there is a power of audit committee to approve transactions or unforeseen related party transaction up to 1 crore is exempt. If it's part of that, then doesn't apply. But if you have seen and taken a omnibus approval from audit committee, I think the ISF standards apply. Of course, there are challenges in giving the fabricated details or in giving the details of each of the thoroughbred what is required there, which has to be carefully crafted. But in short, the disclosure apply to such requests as well, omnibus approval.
Okay. Savitri, you have raised hand. You want to say?
No, I'd raised my hand for the earlier question. I will just lower my hand. But, talking about this, yes, I agree with Subramanian. Point here is the term unforeseen related party transaction is a term very clearly used in Regulation 23, Sub-Regulation 3. So what it means is where you don't know the name of the party, and in order to ensure that the business is not impeded, this has been permitted in LODR. So for unforeseen, which is very clearly subject to a limit of 1 crore per transaction as is given in the regulation, which is also in sync with Rule 6A of Chapter 12 rules. There, the industry standard note also says that it will not apply. So it will not apply. Yeah.
Okay. Next question. Are the standard applicable to transaction between foreign subsidiaries or Indian listed companies? Ankit, can you give answer?
Yes, it is applicable.
It is.
Okay. Next question.
Otherwise, Pawan, we are opening up a Pandora box.
Yes, sir.
I don't think we can allow that to happen.
Yes. Absolutely right, sir. Next. Do the revised standard apply to high value debt listed entities, especially in the light of Chapter 5A of the Regulation 62K applicable from 1st April 2025? Are there any exemption for high value debt listed instrument operating under PPP model? Anyone?
So here, the revised standards, whether it is applicable to high value debt listed entities, to put it very simply, answer is yes. This is because Regulation 15(1)(a) very clearly states that 16 to 27 regulations of LODR are applicable to high value debt listed entities. Now, with respect to compliances of high value debt listed entity, you have a new chapter 5A, which has been introduced from March 2025 and which has the 62K and other provisions. Now, the point here is since 15(1)(a) very clearly says 16 to 27 is applicable to high value debt listed entities, 23 will be applicable, and the industry standard note has been issued drawing power under Regulation 23. Hence, it will be applicable to high value debt listed entities also. The process of approval is what is given in 62K. That's different.
Okay. Okay.
This applicability standards for all matters requiring all related party transactions requiring approval of the audit committee or the shareholders as the case may be. So minimum information to be provided to the audit committee and shareholders for approval of related party transaction is applicable for any related party transaction which requires approval of these entities like audit committee or shareholders. It is not dependent on equity or high value debt listed. 62K, if you see 62K, it is a replica of Regulation 23. But that is not the point. The point is it is an RPT. It requires audit committee approval. Standards apply. Minimum information to be provided. That's all, sir.
Okay. Okay. Next question. Because questions are more, so I'm not going in detail, and the purpose is that participants should know the question and their answer. Are these standards applicable to subsidiaries of a listed company, their joint venture, SPV, an unlisted subsidiary where the listed entity is not a related party? So, Ronim, your question this.
Yeah. So this actually is an oxymoron. See, if they are not a related party, then there is no question of these standards getting applied. Having said that, the subsidiaries of a listed company, if it's a wholly owned subsidiaries, then you don't need any omnibus approval. So standards again don't apply. But if there are joint ventures, SPVs, unlisted subsidiaries, assuming they are not wholly owned subsidiary, you would need to go to audit committee. If you're going to audit committee for an omnibus approval, you will have to follow the ISF standards. There are no exemptions for that.
Okay.
Yeah.
Savitri?
So LODR is applicable to listed entities. So coming back to this question, are these standards applicable to subsidiaries? If the subsidiary is an unlisted subsidiary, then LODR is not applicable to that subsidiary. However, is the listed entity, the holdco, is it required to comply with these standards with respect to transactions of the subsidiaries to which the listed entity is not a party? The answer is yes, provided it satisfies the limits given in 23(2). That is, if the transaction exceeds 10% of the standalone turnover of the subsidiary, although the listed entity may not be a party, if that transaction is with a related party of the listed entity or of the subsidiary, then such a transaction will go to the listed entities audit committee. Secondly, if this transaction value exceeds materiality threshold of 10% of consolidated turnover of the listed entity or 1,000 crores, whichever is lower, it will need approval of the shareholders of the listed entity. In these two cases, industry standard note will apply, although the listed entity may not be a party.
Done. Next question. In case anybody wants to add something or he has a different view, please raise your hand. Otherwise, will the standard apply to wholly owned subsidiary even if exempted under SEBI LODR but included under Companies Act omnibus approval? KSR.
This 23(5), there is a clear exemption granted in the standard also. It has been referred to. Holdco and WOS not applicable. Any two WOS not applicable. Therefore, wholly owned subsidiaries are transaction if it is between the Holdco and WOS, or WOS and WOS, they are exempt under 23(5). So if the question is to be understood as a wholly owned subsidiary entering into a transaction with a related party, then what I do is answering even the previous question also. I will go to LODR and see whether it is a related party transaction within the meaning of the provision ZC, which means it is a transaction involving transfer of resources, etc., between listed entity and any of its subsidiaries on the one hand, and related party of the listed entity or any of its subsidiaries on the other hand. Therefore, if it is falling within this related party transaction definition, not exempt under 23(5), standards apply. That's all.
Okay. Okay.
Or it put it this way, if the transaction is exempted under LODR, standard is, or applicability to standard is not there.
Okay. Next. Shivam, next question. Are transaction between two subsidiaries of a listed company where the listed holding company is not directly involved covered under these standards? Anyone?
I have just answered that also. No, in 10 also. 8, 9, 10 is same answer.
Okay. Next, 11. If the transaction not covered under the part B or C, does it still need to comply with RPT disclosure standard?
Absolutely part A.
Yes.
Okay. We have to part A. Next. A listed entity enter 3 related party transactions during the financial year, each amounting to 30 lakh. It can propose a 4th transaction, 11 lakh with the same related party. Will the RPT disclosure standard be applicable to the 4th transaction? From when will the disclosure requirement apply? So 30, 30, 30, and now 11.
1.1
Do
crore.
not exclude, do not exceed 1 crore together with the previous transactions. So on the 11th lakh one, it will be applicable.
So
Yeah.
it will be applicable on all the transactions, sir.
Yeah.
Yeah, but at 30 and 30 and 30, the 3 levels, it is do not exceed 1 crore. That clause will apply.
So if they were taken separately before the
Separate. That is the idea. The design itself is like that, sir.
The moment you cross 1 crore, the entire provisions will be applicable.
Yeah, so absolutely right. 30, 30, 30 you can do. As soon as you are crossing 1 crore, this will be applicable. Now, I have to disclose earlier one also, or the only 11 lakh rupees transaction.
No, I think you should disclose the earlier one also, because that is a
Also.
transaction with a related party. Because it's important for the audit committee or the shareholders or the board to understand what is the depth of the transaction, right? So it's a material disclosure from that standard. Even if ISF doesn't say, I think it's a material disclosure.
Yeah,
Otherwise-
Shivam, you want to say anything in this?
No, sir. At the 11 lakh rupees, the standards will be.
So I have to give all the 90 lakh rupees detail also.
Yeah.
Yes, sir.
Okay, next question.
Previous transaction.
Yeah, that is already mentioned. Next, is the rupees 1 crore threshold to be applied to each individual related party transaction or the aggregate value of all transactions with the related party?
I think the answer to this lies in
Aggregate.
the other question.
Previous question has the same thing.
Yeah.
Next. Are transactions below 1 crore not covered under Part B subject to disclosure under the standards?
Transactions under 1 crore are not covered across at all under the
Across.
The
standards.
Part B.
Yeah.
Part A, B, C.
Yeah, it's a Part B. Shivam, you have answer on this?
No, if it is less than 1 crore, sir, then part A,
It
B,
is not
C
covered
all
at
doesn't
all.
apply.
Yeah.
So it is not covered at all.
No.
Even not even part A will not also not apply.
Okay.
No part will apply, sir.
No part. If A is not applied, then it will not. Okay.
Yes.
Now, these are other than
Sir,
applicable.
I have a on the applicability part. If a company has a 5 crore turnover, so 10% of the 5 crore is just 50 lakh rupees. So if company is going to undertake or approval of a RPT of 90 lakh rupees, which is under 1 crore rupees, then they have this is a material RPT or under the 1 crore. So part A, B, and C, which should be follow, because it is under 1 crore rupees, but on the other side it is a material RPT.
No, you are talking about transaction by
Material RPT is 10,000 crore and 10% of the turnover, whichever is less. So 50 lakh rupees is the
No, this
threshold.
seems to be a very hypothetical question, but we don't need to labor much on this. Anything which does not exceed 1 crore, the total inapplicability, that's all.
Shivam,
But sir, on the other side, this is a material RPT, sir.
We don't care about it. This is about standards, not
Yeah.
about the requirement under regulation 23. This is about information provided under the standard. For this purpose, it is 1 crore is the base threshold. Therefore, we don't really worry about whether it is material or non-material, irrespective of regulation 23, which requires approval to be obtained. Whether this information to be provided, no.
so case are very simplified. If your transaction is less than 1 crore rupees, standard will not apply. But whatever law is there, that is applicable to your
That's
performance.
correct.
It
correct.
does
So sir,
simple.
this needs to be addressed in the FAQs.
हाँ
This
बिल्कुल
question.
सर. Sir, this program is for the creating FAQs.
I think we have spent more than 4 days on the 1 crore. There should be any doubt on this.
Okay. Next is guideline for placing information to the audit committee. Now, audit committee is the wholesale, even whatever is going to the shareholders, audit committee is approving. Whatever transaction is not going to shareholder, audit committee is approving. And there are some transactions which are not required to go to the audit committee or less than 1 crore, but audit committee wants to make something or some detail, they can do. Maybe the applicability will not be there, but information they can ask. So it's a very important role of audit committee. For calculating indirect shareholding or control to be considered net shareholding, if a listed company holds 60% in an entity, which is done hold 51% in another entity, whether the shareholding of listed entity in the step down entity should be considered as 31%, 51% of 60, or in which case that does not appear to be controlled.
So I think in this example, the last entity is in a way subsidiary of the listed company. So it will be deemed to be indirect shareholding or control, whatever you say.
So 31% has no impact.
No, I don't think so. 31% has any
Savitri,
role.
Chopra sir, anybody?
So I would also like to actually understand whether this listed entity or the subsidiary has the power to appoint directors on the step down subsidiary. If you have that power to appoint even the directors and it cannot be appointed without you or some other control matrix, then in that case the control will be there. But if you ask me, so far as this 31% is concerned, I still feel that it should be applicable. The standard should be applicable in this because we are holding 51%, 60% in the entity which is holding, of course, lesser percentage in the other company.
Okay. Subramaniam?
Pavanji, so my view is that as such, the ISO standards will be applicable here, right? Because it is a non-wholly owned subsidiary, you need to go for the omnibus approval to the audit committee. And in terms of control, I think the ISO standards refer to definition of control to what is defined under the LODR regulation. LODR again ties the definition of control to the takeover code. Right. So in which case, I think Narayan Shankar rightly articulated when he was addressing, saying controls are different types. You need to see board control. You need to see what kind of other controls have. Do you have a right to control the policy decisions and all those stuff? So it is not only the shareholding which should be considered to say whether you have a control or not, but it's a combination of other factors.
Okay. 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 Next. Shivam, next.
I would just like to add to the previous question. See, this control point that we are referring to in the earlier one, let's try to understand the practical implication.
Yes.
The disclosure is required with respect to indirect shareholding. Here, in this example, the second entity, as was also mentioned by Ankit, is already a subsidiary. So you are responsible as the listed entity to cover the transactions of this entity also. Let's assume the transaction is between the listed entity and this subsidiary. You would show the relationship as subsidiary, because under Companies Act you're having voting right of 51%. It will clearly be a subsidiary, and it is already a related party. The indirect interest comes into play only when you are holding X and it's a related party, but there is other indirect holding, whether by the person or by the relatives. So I don't think this is a right example for trying indirect holding. And here, since it's a subsidiary, it is considered as 51% only. You would be saying that the subsidiary holds 51% in this entity. That is the way you will be showing the relationship.
Okay.
Anyway, sir, I would like to add simple way of understanding in my opinion is whether the word control as defined in the regulations is applicable or not in the form of right to appoint majority of directors or policy decisions, etc., which is not a subject matter any longer requiring great explanation because it has been thoroughly explained. So if there is a control, here is a case where listed company holding 60% in another entity, which is a subsidiary. Therefore, that subsidiary is also subsidiary only. So we need to just look at the definition of the word control. As Subramaniam was mentioning, you go from standard, you go to LODR to SAST, and you will be able to see this right to appoint majority of directors or right to control the management or policy decisions. That's
Okay.
all.
Okay. Friends, we have reached to 15 questions and we have 35 more, and 25 questions are in Q&A box. So we have to be quick now. In place of starting rapid round at 5:45, I'm starting now. So we have to give fast answer, quick answer, and there is no value addition. We will just not to add. What are the reports of the external party apart from the valuation report which are required to be placed before the audit committee?
Yeah, for example, any industry specific, sector specific report of prospects, etc.
Okay. So it's a round, rapid round also, and who will speak first? He can start. Okay. So next, should we obtain approval of the audit committee separately for omnibus approval if a multi-year contract with the related party is already approved by the audit committee prior to entering into the contract?
I thought Savitri will immediately answer.
Savitri?
Yes, I was on mute. I didn't realize. Should we obtain approval for omnibus separately if a multi-year contract is already approved prior to entering into the contract? This question is not very clear, but the way I understand the question, if you have an omnibus approval, see the term omnibus approval is understood differently in different context in 23. But let me call it this way: if it's a multi-year contract which has already been approved by the audit committee prior to entering of the contract, you're basically calling it a long-term contract. Does it require audit committee approval every year? Answer is no. You only need to note the limit year on year. You don't need approval. Let's say, for example, you have entered into a 5-year purchase contract with a party which is a related party, and the contract has already been signed. You cannot once again go back saying I'm now changing it unless there is an amendment to the contract. What you're doing is you're executing. When you're executing, there cannot be an approval. It's given right at the beginning when you're entering into the contract. So it's not an approval, it is noting.
Okay. Next. Does all the comments of the audit committee on the information provided by the management need to be captured in the minutes, or are the comments regarding unapproved RPT required to be captured in the audit committee meeting minutes along with the rationale? Subramaniam, because you are handling so many companies in the L&T.
Yeah. So in my view, Pavanji, what is important in material is when audit committee is turning down any RPT and there is a comment, in which case it has to be captured. Again, in case it's based on the discretion of the chairman, because the Companies Act does give discretion to the chairman as to what is to be included, what is not to be included, and that cannot be overridden by any other law. And if the audit committee chairman members are in agreement, we should be recording such comments.
Anybody?
In the standards,
Yeah.
if you see the para 3 has got two separate sentences. So we have to understand that they are two separate. Comment on management information is different from the rationale for not approving. So these two are separate as sentences in para 3.
So we have to follow according to the transaction.
Yes,
No,
exactly.
and rational or comments are two different issues. As far as comments are concerned, I will say please go to SS1.
Okay. Next question. Given the requirement to record the comments of audit committee with respect to information provided for approval of RPT, does the chairman of the audit committee shall still have discretion to direct the management not to record any specific comment which is otherwise required to be captured in the minutes as per ISF standard? चोपड़ा सर, ये तो आप ऑडिट कमेटी के चेयरमैन हो और एज ए चेयरमैन अगर
You see, very frankly, if you ask me, I will not ask someone not to capture a comment, very frankly. In the interest of the good governance, why should I ask someone not to actually capture one of the comments?
Perfect answer, sir.
Irrespective of the standard, I will rather welcome that if at all any of the comments have to be captured in the minutes for that matter.
Done.
So
Any
I
comment
will
which is of inappropriate, defamatory, insulting, malicious will not be recorded, and chairman has the discretion to say it shall not be recorded.
No, but the only thing, KS, I will like to say is that you talked of malicious, etc. I am only talking with regard to the decision on a particular matter. If at all someone has commented on why it should be there or why it should not be there, I think that part of the comment you cannot ask someone to actually not record. So far as any defamatory marks are concerned, I am absolutely in agreement with you.
Fine.
Actually, the same SS1 is saying that if a member of the committee or member of the board wants his comments to be captured in the minute, the chairman is duty bound to incorporate that, unless whatever KS has said.
Yes. Okay, next. Regarding the joint certificate requirement to be submitted to the audit committee by the WTM, MD, CEO, and CFO, if the CFO is also full-time director of the company, is a single signature sufficient, or must the certificate still joint signed by WTM and CFO?
So as long as the CFO discharges the function of full-time director and also the CFO, I think single certificate should be fine. Because this is not a maker-checker concept, which the law envisages.
But if you have another WTM, the governance is that CFO should sign and he is also WTM, so another WTM should sign. That is a good governance because two person is signing. Though technically WTM and CFO is the same, he can sign one signature. Savitri, what is your view?
See, this is a point from a governance perspective, and going by the plain reading of the language, where it says WTM, MD, CEO, and CFO, it basically is referring to two persons. If the two
Yes.
designations are combined into one can take a technical interpretation, but going by the spirit of the transaction, it is basically referring to two persons signing two positions. Alone will not be sufficient. It should be two persons.
In our FAQ, we will not write that you can arbitrage of these two designations. We will say the WTM and CFO, if they are, suppose there are two WTM and one WTM and CFO. So it means कि CFO वाला WTM sign करेगा और WTM वाला WTM sign करेगा.
वो नहीं चलेगा. तो बोलते हैं कि एमडी को साइन करने दो या सीईओ को करने, because just as with respect to financials under 17(8) there's a certificate signed by the CEO, CFO.
Yeah.
Similarly, there'll be two persons signing this year.
Done. Next. 21 question number. What additional document should be submitted to the audit committee for RPT approval post amendment?
Are we talking about any modification to the material modification to the RPT, or it is the standards being introduced?
I think this question, what is it? The additional document should be submitted to audit committee for RPT approval post amendment.
What's the meaning of the word post amendment here?
So post amendment is modification.
Modification to RPT.
Be material modification only.
हाँ,
I think, sir.
ठीक है.
In any case, if there are modifications, then whatever reasons for the modification and whatever the implications of the modifications are there, that need to be submitted to the audit committee.
Okay.
Any guess?
Can the audit committee seek independent valuation? Then pricing is not standard.
Absolutely, all powers
Yes.
of audit committee are available.
Yes.
So this is one important issue which audit committee is confused that I am bound by what information is given by the management. Answer is no. Audit committee can ask any independent valuation report for making the price and making the approval of this particular transaction.
And not
Next.
only that, I would like to add here in a rapid way that the objective of the management is to get the approval of the audit committee. So the management would not want a reason for audit committee disapproving it.
Okay. Next is can the audit committee insist on compliance certificate on RPT standard from the CFO or for unaudited quarterly results along with the other statutory compliances certificate being put up to the audit committee? So audit committee can ask any information, KSR?
Yeah,
Absolutely.
absolutely.
Yeah.
There can be some
In any case,
unaudited figures that can be certified or
Okay.
in any case, so far as the unaudited quarterly results are concerned, they can definitely ask the certificate from the CFO.
Yeah, perfect. Perfect. Okay. Next is minimum information to provided to shareholder for approval of material RPT. This is the general clause. Now, what are the things? What can be redacted and who approves it? Now, the question is, suppose you are submitting some information and which is price sensitive, which is secret. So the standard allowed that you can redact that which you are approving. So what are the things it can be detected? Subramaniam, you are doing so many transactions and some secrecy will be there.
Yeah. So your commercial model or your commercial secrets can be redacted with the approval of the audit committee, but it should be ensured that despite your redaction, actually there are no material withhold which happens from the shareholder. Material facts are not withheld at the notice level. I think the discretion is with the audit committee, but it has to be exercised judicially.
Okay. Okay.
And para 5 is very clear about audit committee and board of directors. So I don't read and as and only. As far as the standard is concerned, the audit committee and board of directors can approve the redaction of commercial secrets.
Okay. When audit committee will approve, it will go to the board. Board can do this. So both can do. Okay. So that now is QR code and babbling mandatory for valuation report? Answer is yes.
Yes.
Okay.
Yes.
Next, minimum information to be proposed RPT A1 to A5. Now specific, I am coming to this. For making disclosure based on the turnover and other parameter for preceding financial year of the listed entity, what would be the suggested approach if the listed entity's audited financial for the preceding financial year are not available at the time of seeking approval to the audit committee or shareholders? Amarjit sir, your
No, to my mind, it will be very clear that you ask for the unaudited results. It is not that every time you will have the audited results, but that definitely the management can provide the financial information whatever will be required in connection therewith. And of course, whatever certificates are to be obtained from the CFO or other persons, those certificates may be obtained.
Okay. Next. Which relative are included in the definition of indirect shareholding? Ankit, Shivam, anybody can tell.
No, this is very clear, sir. I will give you immediate answer. You see, AFI 7 minimum information, it talks about the word control is used here.
Yeah.
So if a person is under control of another person, only this will come.
Yeah.
Not because the person is relative.
Sir, there is a para 2 in the standard which provides hierarchy manner how to analyze the word and expression used. So we have to follow LODR, and LODR refers to the company there.
So he's talking about the hierarchical. If the LODR is the first, if something is come in LODR, you have to follow that. You unmute yourself, yes, sir.
No, here we are talking about control in respect of relatives. Indirect interest shall mean interest held through any person over which an individual has a control. Any person may be natural, non-natural, over which an individual has control.
Okay. Okay. What constitutes a default by a related party? Now, this is very interesting and so many questions on this.
Yeah, default is well defined, no, sir. There is a clear definition, and this default in borrowings.
Madan sir, you also ready because default is your domain.
Oh,
Yeah,
no,
it is supposed to
it's
be
a
public
domain of KSR also.
Yeah,
no.
agreed.
KSR is our Jaswasi. Savitri is acting as a gill. You are acting as a and the Jadeja where it is required.
Pawan, I think default can be in different respects basically. If it is a loan transaction, in that particular case, it can be irregularity in the payments of the interest or the principal, or even it can go as a bad debt for that particular matter. And so far as the other trade transactions are concerned, if you had agreed to supply a particular material by a particular date, if you don't do it, probably that can also be considered to be a default.
Yeah.
So it will depend upon transaction to transaction. I personally feel that if we only take it from the viewpoint of the loans and advances, it may not be appropriate. You have given somebody a trade advance. I think the trade advance was discussed in the beginning, to my mind. Now, if the trade advance was to be adjusted in a particular manner, and if it is not being adjusted, to my mind, that would also constitute a default.
Okay.
Sir, so far as default is concerned, it appears in A3 as well as in C1. The language used in the standard is beautiful. It says default in respect of obligations undertaken by the related party during the last financial year. When it comes to material RPT under C1, default on borrowing subsisting in the past 3 financial years. So in C1, when it talks about loans and advances, we confine to borrowings defaults relating thereto. When it comes to general information in A3, it is default in respect of obligations undertaken by the related party.
Yeah.
That's all, sir.
Madan sir, you have any point in this? Quick.
Because from insolvency point of view, we always say default means any debt, be it financial debt or operational debt. Whenever it's a debt is outstanding, due and payable, has not been paid, it's a default.
Okay.
Same yardsticks you have to apply. Then certainly, as Chopra sir has said, certainly on transaction to transaction, we have to see the applicability of this.
Okay.
But for A3, kindly understand in contrast distinction with a default in relation to a financial transaction. A3 is on obligations undertaken by the related party.
Okay. Super quick round now. Next, if the previous financial statement of listed subsidy are unavailable, can an unaudited financial result of the preceding quarter be used for disclosure purpose under the ISF mode? Chopra sir.
If the previous financial statements of a listed subsidiary are unavailable, can the unaudited financial statement? Yes, with the proper disclosures and certificate from the CFO, etc. You see, after all, you have to comply with something and you have to rely on something. If the audited are not available, then you will go to the unaudited. Of course, there has to be a certificate from somebody from the management that these do not result into a material misstatement in any of the circumstances.
Okay. Are these any transaction that are required to be disclosed only under Part A? Or does every transaction necessarily fall under one of the category listed in Part B, 1 to 7 as well? Can there be instances where Part A disclosure are sufficient without linking to any specific Part B category? Savitri.
So if there is no Part B category, B1 to B7, if there is no purchase, sale, loan, investment, guarantee, royalty, or otherwise, then what are you placing before the audit committee? If you're not placing anything before the audit committee, you don't need A also. A1 to A5 is only because there is something which is going to the audit committee. If there's nothing, why is it required at all?
Okay. Next question. What is the approach if a related party is not a company? How can calculation with respect to turnover and net worth be done?
So this would be
Sir,
not
would you like to take this? Yeah.
Yeah. Please.
This would be not applicable according to me because net worth and turnover are specific to body corporate. Right? If it's an individual, why would you put a? I know there are options available, but why would you apply net turnover and net worth?
Amarjit sir, any contrary view?
No, I even suppose if it is an LLP, then what happens? You have the turnover also, you have the net worth also. Can you say that you will not have in those circumstances?
LLP you can do,
It will be
but
there.
I'm talking about individual firms also you can do.
And
I'm
the
talking about
individual cases
individual.
could be different.
Individuals' income will have to be given. Let's say, for example, if it's an individual, what percent? See, if it is an individual, it will be very, very, very rare that it will go to the shareholders.
Sure.
However, if that related party is an individual, what percentage of his income is coming from the company is something which the audit committee would want to know. Whether he is fully dependent on the company and it's the related party which constitutes 100% of his income, or it is 10% of his income, is something which one can always give. Turnover,
Okay.
if he is doing business in his business income statement to the income tax authorities, whatever he is giving, that detail can be given.
Okay. Next.
Pawan, it's an excellent question. I think the clarity is needed here in case of individuals also, like we have seen the question, the case of Jansol in the recent past, where the mother of the promoter was being given a preferential allotment worth rupees 200 crores of rupees. So in that scenario, that certainly net worth or the bank statement or the wealth statement, income tax statement should also be seen of that particular individual.
That we will take care of this part. Next.
Yes.
Question number 30, sale, purchase, and supply of goods. What is mean for trade advance, which are self-liquidating?
I think this is one question which needs to be answered fairly and squarely. You see, what has been happening is, and this is what is covered by the Schedule 3 also, if you ask me very clearly, and this is asked to be answered even in the CARO by the auditors. Now, if I keep on giving trade advances, and then instead of actually self-liquidating, if these come back to me, can it be treated as a trade advance? And then whether trade advance can be disproportionate to the turnover or the ability of the related party. I think that's again a very important part.
Okay.
There, I think the audit committee will have to be extremely careful when the trade advance is being given and whenever the details are being given, whether the other party has the capability of getting itself liquidated at the end of the day.
Okay. 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 Next. What it mean to the loans advance other than trade advance or intercorporate deposit given by listed entity? This is B2 to C1. What is the definition of default which we have done? Does default refer exclusive to financial default or does it include other pays type as well? When would an action be considered as default which is required to be appropriate?
This has been discussed.
We have discussed. Next question. When a loan is proposed to be given to the unlisted NBFC, which is subsidiary to listed entity, are disclosure under B2 still mandatory? Shivam, can you give answer of this?
No, if to my mind, if you ask me, Pawan,
Yeah.
if the subsidiary is an NBFC and it is unlisted, but it remains a related party so far as the listed entity is concerned, there's no doubt about it. And if you are giving certain loans to them, then I think the terms and conditions, etc., everything, the rate of interest, etc., will have to be considered, and the information with regard there to will have to be given. Why not? I think whatever will be applicable, particularly in respect of the terms and conditions, the repayment, the rate of interest, etc., will be applicable in this case also.
Okay. Okay. Next question.
Question I will answer slightly differently for clarity. We are talking about loans and deposits of listed entity or its subsidiary. Therefore, this question has arisen. If you see the B2 1 or 2, the exemption in the note given is item of disclosure is not applicable to listed banks, NBFCs, insurance companies, and housing finance companies. So if the NBFC itself is listed, the disclosure is not required. In this case, it is unlisted NBFC. That's all, sir.
Okay. Friends, next question. Shivam is a bigger one. Go to next 37. So please give answer in a one word now. Would loan given by NBFC to any of the whole-time director of the subsidiary qualify as a retail purchase?
Everything will apply. If it is less than 1 crore only, it will not apply.
Okay, next. Are section B2 to B5 applicable to private banks?
No, sir.
As a listed private bank, is a private bank or listed private bank?
If it is a listed, then applicable.
If it is listed, then are not applicable. If it is unlisted,
Then not applicable.
then
The whole thing will not apply. The
So
whole
But
thing
in
won't
any
apply.
case, the standard will not apply.
okay. Who certifies the security coverage ratio next?
Everything is CFO. Next.
CFO.
Okay, next. Guarantee. What is the required to be considered for computing the solvency status of the related party?
Section 59 of IBC will give you guidance on solvency certificate. So it is a asset value of assets more than the value of liabilities.
Okay, now everybody is free to speak. So who will speak first? He will give answer. What would a shortfall undertaking provided in respect of credit facility extended to a related party require prior approval of the audit committee?
Impact in monetary terms.
Okay. What qualifies as a comfort letter with financial implication?
Answered already.
Okay.
But this is not a standard question for the standard, applicability of standards.
Okay. Next question. Borrowing for listed entity or the subsidiary. In case of transaction relating to borrowing, how would disclosure to be rate of interest on which the listed entity subsidiary is borrowing be made if there is no borrowing with a comparable maturity profile, assuming that there are other non-comparable maturity profiles subsisting in the listed entity?
The disclosure required is of borrowings undertaken with a comparable maturity profile only. If it is not there, then it is not there.
So you write this that this is not.
Then you mention it. Then you will have to mention.
Okay. Oh, next. Is the requirement to disclose the rate of interest on borrowing of a comparable in maturity profile not applicable to subsidiary to listed entity, as the same seems to be covering only listed entity in the disclosure standard? Is it correct statement, KSR?
Yeah, the standard talks only about listed entity with a comparable maturity profile.
Yes. Okay. Not the entire word.
Yes, absolutely.
What are the elements required to be taken into account for calculating all cost of borrowing?
You can go through ECB guidelines.
Okay. What would be the approach if the parent company refuses to disclose how royalty is charged in other jurisdiction to the listed company?
We will mention it in the audit committee. We'll give the comment on that because there is a refusal.
Okay. And should they write the reason of refusal or not?
Refusal, they may give reason, they may not give reason. If it is there, we will put R and R, that is refusal and reasons.
Okay.
Yeah.
How to split royalty between brand and tech under composite license?
If it is there only, we need to give. I think our note itself is clearly talking about if it is available.
It is available, you give. If it is not available, you go.
Exactly.
Yeah.
Correct.
What if
C6
what if peer company does not don't disclose royalty?
See, we are talking about peer-to-peer, apple-to-apple. We have given guidance also in C6 clearly, A, B, C, D is there. But
Okay.
doesn't mean there is a peer you need to provide. The peer company should be also paying royalty. Then only it is peer.
Okay.
That's
Whether
all, sir.
whether the sitting fees paid to independent director would be covered under related party transaction risk protection.
No,
I don't
No.
think so.
Okay.
no.
Congratulations. Okay. For
Aman, actually, some of the questions are there. If this company doesn't do that, that company doesn't do that.
and I'm not taking. I will not take. I'll take.
These are the governance standard, disclosure standard. This is to facilitate the audit committee, facilitate the independent directors. Still, if the companies do not do, let them face the music.
Okay, I will not ask this question. For the Q2, the earlier standard will remain is the applicable. Savitri KSR. No. Answer is no. For the Q2, July, September, the
Questions are not appearing on screen.
Not applicable.
Pardon?
Questions
No.
are not appearing.
These are live questions which has come. I'm just covering that.
Okay.
For Savitri, for Q2, July, September, the earlier standard will remain be applicable. It has been drawn.
July, September. So the question is, when did the audit committee approve? It will not be correct to say July to September. If the audit committee is approving after 1st September, definitely you will have to comply with the new
No,
standards.
Savitri, the question is different. Question earlier standard was applicable on 1st of July, but that has been
No.
withdrawn. What is
Correct.
whether from July to September earlier standard will apply, from September on a new standard will apply? That's the question.
Because that
No.
standard is withdrawn, so it will not apply.
Yes.
That's right.
Friends,
Up to August 31st, no standard. 1st of September to 30th September, new standard.
Yes.
okay, with the permission of
Why
the,
not to? But Pawan, why not to suggest that it should be applicable from 1st of October? I think let it be that way.
sir, अब वो hope
Much better.
try किया था. Okay, with the permission of the panelists, we have crossing the time, so I'm just continuing. Still, there are 170 people are there. They are waiting for their answer. But listen to the answer. Applicability of RPT and royalty payment to joint venture partner.
Sir, all royalty payments will apply, sir.
Okay, applicability of RPT on transaction and with the overseas subsidiary.
Already answered.
Applicability of RPT on CSR contribution to implementing agency, which is related party.
All related party transactions are covered.
Okay. If a 1 crore limit is my materiality, whether the same is required to be followed? Answer is yes.
Already answered actually.
Oh, okay. A transaction by listed company, also by the subsidiary with a common related party, say the joint venture company, will the combined value of transaction by listed entity and the subsidiary need to be considered while checking the threshold?
Absolutely.
Okay. Financial performance of the related party will be the challenge in case of overseas entity that is closely held private entity not required to disclose financial in host country to disclose to Indian party financial of the part disclosed will not disclose to the whole world. What
I think it's
Disclose
a
it,
comment.
disclose it, and let the audit committee actually be aware of it.
Okay, whether the IS or still RPT applicable on transaction between holding and whole subsidiary, we have given answer. This is important. Can Narayan Shankar document the various points which he has mentioned in the talk? It will be very helpful for compliance officer. Yes, we will take it and share with everyone. Should related party transaction be approved by extraordinary general meeting in case of private limited companies?
Question passed. No need to answer. Next.
Which judgment of the Supreme Court? This is another. Should the remuneration paid to director and their relative in case of private limited company include AOC 2 altogether? They are disclosed in the audited financial despite not occupying. No, this answer is not different. What are the do's and don'ts for IDs and audit committee to do a good job with regard to RPT? Follow the standard. Ask question where you are not satisfied. If the management is not giving or you are not convinced, take from outside the financial as well as other reports.
It is a very important question, Pawan, if you ask me. It will all depend upon the spine of the audit committee members.
Yes, yes.
I can only say that. No standard or no guidance will be good enough till the time the audit committee members themselves have a spine to ask the questions.
Yes. So Mr. Jain, the answer is you should have a spine to do this work. That's the best question, best answer you are giving.
Sanjay Jain Saab is asking this question.
So, should personal guarantee provided by director in respect of loan taken by the companies be included in the RPT to be approved in case of private limited companies?
यार प्राइवेट लिमिटेड कंपनी कहाँ से आ गई अब इसमें?
Okay. What disclosure are to be provided in case of approval for scheme arrangement since nothing is specified? No. Industry standard not applicable to all type of omnibus transaction. Subramaniam, yes,
It is applicable for all type of omnibus transaction, but there are specified details which is required to be given under Part B and Part
an
C.
exemption also they have given.
Yeah, correct.
If the approval is taken as per the SEBI master circular, do the company need to take fresh approval as per the industry standard?
Yeah, I think the transitional part has
1st September. The deadline, please remember.
The 1st September it is covered, no?
So,
okay. Materiality is aggregate of all the transactions. Suppose now company is going for a approval of the shareholder in the case, different kind of transaction is going to be held in future. So different kind of disclosure is applicable. How to deal with this?
So this is a very interesting question actually. let's assume you have different types of transactions and all put together exceed materiality. The question is, will you be required to comply with the specific disclosures under B1 to B7? Answer is yes. So, in that case, different transactions, types of disclosures would be required. How to deal with this? You will have to give disclosures from B1 to B7 because it's going to get covered under different heads. Say, for example, loan, guarantee, purchase of materials, investments. Then all four need to be given.
I
Okay.
think we do it presently also, where we take composite approvals for omnibus from the shareholders. Like you have loans, performance guarantee. We give those specific disclosures which was there in the market circular, in the master circular. Sorry, Vadan.
I'm sorry, I need to drop off now. It's really been great being on the panel. Thank you very much, and please permit me to drop off.
So only few questions left. Any performance guarantee given by listed holding company for its unlisted wholly owned subsidiary shall come under the industry standard? Answer is yes.
Okay.
What if the finance department do not share the required information? Kick them out. Does reimbursement of expenses get covered under ISF? Reimbursement of expenses. If the reimbursement expense is more than 1 crore, it is covered.
You'll come.
Excellent.
What if the finance department do not share the required information?
Already answered.
Answer already given.
The audit committee shall review at least on a quarterly basis the detail of related party transaction enter into the listed entity 183 or its subsidiary pursuant to each of the omnibus approval given or their review. Do we need to present the report in the IS format?
No, not. I think it's adequately dealt with in the ISF instructions. It is not applicable.
Okay. If the company entered into a royalty payment for a term of 5 years and it has already been approved by the audit committee, whether these agreement again to be placed.
Answer has already been
I think
given.
we already discussed this.
We have already given this answer.
Savitri already gave it.
Not required.
Okay. This is just like a managerial remuneration issue, which is decided by so many court and ministry also. Is there any difference between definition of promoter as provided in SEBI LODR or revised ISN Indian industry standard? No difference. Whatever LODR is saying, we are following that. If you provide more information, would it be become an information overload? Sir, we have mentioned.
Already answered, sir.
Yeah. No, I'm Mr. Jain's question, so we have to be very careful. We have to go and meet him also. Other people are from. So, Mr. Jain, if you are giving information, you give correct information. Overloading is also right. The audit committee can refuse, which is not relevant. Material is aggregate to all transactions. Suppose company is going for a approval of the shareholder. In the case, different kind of transaction is going to be held in the future. So different kind of disclosure is applicable. How to deal with this? We have already given answer. Okay. Is there a standard format for the certificate? The certificate format is not standard, but in FAQ we will try to put it something. How to determine the applicability of Indian standard, industry standard for RPT, where purpose and effect of which is benefit the related party of the listed entity or any of the subsidiary?
All transactions are commercial considerations. So
Okay.
nobody, the related party cannot have benefit. All
Okay.
that we are talking about is justification. It is in the interest of the company, listed company.
Okay. Last question. If transaction with the related party of holding company is material, then do the subsidiary listed company do to whom SEBI is applicable, or the holding company will take approval as per the standard, even if holding company is not a party to
I
transaction?
think this is covered under the LODR. No, Regulation 23 says that listed subsidiary can take approval. Listed holding company need not take any approval.
Okay, friends. So 50 question and 30 question are 81 questions we have covered. Okay, and the multiple things. So friends, the time is to close this session. It was very interesting interpretation and discussion which we have done, and everybody has given answer to the well query. The purpose of this program is whatever confusion you have, if we can come out with a FAQ from Industry Standard Forum, because all the members, those who are speaking, they are the member of the Industry Standard Forum, and I am fortunately chairing that committee. So we will take all the views, we'll come out with the FAQs, and we will try to solve all the points. But some questions are very relevant, and we have already given answer in the standard that we will not cover. But rest of the thing, we will realize, yes, this is a question where there is a confusion. We will try to do this. So before closing this session, I just want to make one announcement. Our next webinar is on 18th July on shareholding pattern disclosure. As you are aware, SEBI has reiterated the old circular, and now they are saying anybody who is a promoter or promoter group, even if they are not holding single share, they have to disclose their name in shareholding pattern. And the industry is now puzzled how to do it, because so many companies which are having, they have not reclassified, and this is so 18 July we are doing in with the jointly with NSC and BSC, this program we are doing, and we are inviting the regulator also. So before closing this session, friends, we will share this presentation. We will take up all your questions. In case you have missed out any question, you please pass on to us. We will thoroughly discuss in our meeting, and then we'll come out with the FAQ the way we have done this. This we can do with authority, because we have to draft, we have to design, and we have to submit to SEBI. So you can easily write to us, and that's why we organize this program. Before closing this, I will request.
But before you close, one question, which has been actually in my mind, and I talked to you yesterday also.
Yeah.
If I look at Section 188 of the Companies Act, when it comes to sale or purchase of the transactions, it will talk of the percentage of the turnover, etc. But when it comes to the investment in properties, etc., it talks of, in respect of the related party, it talks of the net worth, percentage of the net worth. So why not the same principle should apply to the loan and advances and investments to be made in the case of the related parties? That's the point I'm trying to make out.
Subramanian, you want to give answer of this?
I will have to think, Pavanji. Sorry.
Okay, sir, we will deliberate this issue. So, sir,
Okay.
before closing this session, I will start from you, sir. That 20-second, 30-second closing this particular topic, and the message you want to give to the industry and the independent director, audit committee, and everybody.
The message is that, of course, we all talk of the ease of doing business, but it is becoming more and more difficult so far as the compliances are concerned. And I can only say one thing, that this information which is supposed to be compiled and to be put up before the audit committee in the time to come, it's not going to be an easy job, both for the management as well as for the audit committee to come to conclusions. I personally feel that audit committees have been seized of certain matters, there is no doubt about it. But the kind of information which is now being brought to the table will add greater responsibility to the audit committee to get into that, and probably the more accountability of the audit committee chairman and the members of the audit committees.
Okay, Madan sir.
My appeal to everyone, please do not treat this standard as a new law, a new regulation, or a new compliance. Please treat it as standard operating procedure or a guidance note to help facilitate the industry, the audit committee, and the shareholder how to approve an audit a related party transaction. That's all.
Ankit. Shivam.
Sir, after complete implementation of this standard, I think number of negative voting suggested by proxy advisory firm will be reduced.
Good. Ankit.
I think my point was also that how proxies will now consider such detailed disclosures. And I think from the earlier version, this has come out very well. It has also shed a lot of weight, but have kept the key important items.
Yes, sir. SEBI is sending some questions which proxy advisory has raised. So we will discuss that also.
Okay.
Subramanian.
Yeah, so my take is that though industry standards are a little bit prescriptive, I think we should keep our moral compass uh, on this disclosures. I think good companies have been disclosing, which is relevant and material. I think we should keep that in the forefront. In which case, the prescriptiveness will come down, and of course, this would also give proxy advisors to bring in more transparency in their recommendations.
Okay. Last, KSR.
Yeah, I just want to say only 3 bullets. Number one, it's definitely a governance improvement measure. Number two, everyone should follow in letter and spirit. That is the expectation. Number three, it fixes collective as well as individual responsibility with much more clarity, and therefore it is very useful from a regulatory perspective also to protect stakeholders' interests. That's all, sir.
Absolutely right, KSR. And I told in my presentation also, actually, this standard will help all professionals, those who are working in the company, what they have to disclose. Sometimes they are under pressure, so they are not able to disclose. But now this is a law, so they have to disclose. Second is, promoter is also clear that what are the information they require. The most important thing, which I think the independent director and the audit committee, that has clear direction now that what information I require, what information is to finalize this particular transaction. Otherwise, they are always in trouble that what should I ask, what should I not ask, what management is giving and what is not giving. It is clear. It's a win-win for independent director, audit committee, and everyone. Regulator is also happy. Follow this in letter and spirit and enjoy the related party transaction with the spirit of the wholeness. Thank you very much.
I like the word enjoy. Enjoy the related party does.
Thank you. Thanks, everybody.
Okay.
Thanks, everyone. Bye.
Pawan, I joined you from Canada.
Okay, sir.
I woke up at 6 o'clock, which I don't know. Anyway.
Thank you very much. Thank you.